Hello, everyone, and welcome back to another episode on value investing, which is brought to you by Moat Investment Research in Ontario, Canada. We bring you some exciting investment opportunities, discussing stocks for businesses that we think are significantly undervalued, according to our estimate, at least, for value investors who are looking to invest. My name is Mehmood P Bakhsh, and today I'm going to be discussing Meta platforms. Now, remember one thing, I first wrote an article about Meta this year for Guru Focus when the stock was trading at about $202 per share. But the stock has actually appreciated by more than 60% since I wrote that article in April, trading at about $328 per share today. Therefore, I still feel that the stock has a lot of room to run and has an intrinsic value of more than $400 per share. Therefore, I still feel that it has another 20 to 25% upside potential. And I'll tell you why. There are reasons why I'm saying that. But before that, I want to read out a little disclaimer for my viewers though. All what I discuss in this video must not be construed as investment advice. We are an investment research company and not an advisor. The investment and services offered by us may not be suitable for all investors. Therefore, investors looking to invest must seek independent advice from their registered investment advisors. Any type of investment involves risk. The prices of securities fluctuate, they may go up or down, and at times also becomes valueless. Therefore, past performance does not guarantee any future returns. Therefore, investors looking to invest must seek their own independent financial investment advice. I also wish to disclose that I have a long position in Meta that I don't intend to sell anytime soon. Now, one of the reasons why we have set up this YouTube channel for our business to share our research and analysis is because we have a very unique way of assessing businesses and valuing publicly traded companies. Our approach is different. That is because we bring in new perspectives, because we don't just focus on quantitative aspects of valuation, but we also bring in new qualitative aspects and insights which are missed out by most other analysts. For example, in case of Meta, we don't just focus on its financials and recent performance, we also focus on its long-term potential as a whole business, which means we don't just discuss the revenues and the profits made by the company or other valuation metrics. We also bring you some insights as to how these profits are generated. Therefore, we don't just assess the risk, we also look at the operational aspect, the governance aspect, the regulations, and most importantly, the hidden risks which may affect its performance in future. And when we gauge the potential for a business, we do a top-down macroeconomic analysis. Now, as we know, that Meta, which was formerly known as Facebook, was subject to a backlash by politicians and regulators because of its involvement in political campaigns during the elections of 2016, which was won by Donald Trump. Now, obviously, the company had to pay a price, and it was fined by the regulators, with its CEO, Mark Zuckerberg, who was summoned by the Congress, who had to testify and clear his name for his unintentional involvement in the elections. Now, Meta, as we know, is a technology conglomerate that actually on social media platforms like Facebook, WhatsApp, and Instagram has more than 4 billion users today. Now, that in itself is a digital economy that exists right there, which is why I think, in my opinion, that Meta platforms has a lot of potential. Now, Meta, as we know, is trying to build this whole social metaverse to connect people, communities, and businesses, which is where it's making most of its investments, where lies all its future revenue and profit potential. It's been making investments more than 10 billion in a year just to build that metaverse. It's also making investments in other applications like WhatsApp, which has been converted into a digital bank today, which is used for sending and receiving payments by its users today. So let's dive right into its financial achievements and valuation metrics. So its revenue by the end of the third quarter 2023 have grown by about 23%. So its revenue has actually grown from 27 billion to 34 billion by the end of September 2023. Its net profit for the same period has grown from 4.5 billion to $11.5 billion today, thus representing an increase of more than 160%. Therefore, along with that, its EPS, which is earnings per share, has also grown by the same percentage. Now, one of the reasons why Meta has been able to achieve such high profitability is because of cutting down costs and expenses. It's been able to cut down its cost by more than 7% for the same period. Obviously, Meta has been making heavy investments in building these apps and also investing in its data centers, which are quite valuable. By the end of September 2023, Facebook has spent more than $2 billion in its data centers and building these apps, which is WhatsApp, Facebook, and Instagram. It also invests heavily in its virtual reality segment, spending more than $500 million by the end of September this year. It's obviously spending a lot on building artificial intelligence, and it also developed and relaunched its Ray-Ban glasses, which are one of my favorites. I see all these investments paying off in the next couple of years. Now remember one thing, its revenues had actually declined in 2022 as compared to 2021, but I think it's recovered nicely this year so far. And one of the main reasons for this performance, as I mentioned earlier, is containing its costs, keeping them at $20 billion, which is why its net profits have actually reached $7.7 billion, which represents an increase of more than 16% year over year. Now remember one thing, Meta is a monopoly because it doesn't have any competitors, which is what actually threatens the regulators, which is why it has very high margins. Although in 2023, the net profit margin is at around 23%, that is because the margins have normalized and because of its ad revenues which have declined, but Meta has actually seen profit margins of more than 100% in its heydays. Now we're going to be looking at other restructuring costs because of share buybacks in a while. But before that, first let's look at some of its valuation metrics. Now remember one thing, Meta's gross profit margin has been well over 80% over the last 10 years, which is why I say that it's a monopoly. When we look at its balance sheet, it's sitting at more than $60 billion of cash and cash equivalents. That is because it cut down on its expenses drastically. The $10 billion that it used to spend on building its Metaverse has been actually slowed down now. It's also cut down its workforce by 10 to 13%. Now, although I don't like that personally, but that's how most big corporations function. Because I personally feel that corporations need to be right-sized always. And when times are bad, which means deteriorating economic conditions, they should not let go of their good employees. That's the reason they have to be very careful in their hiring process. Because cutting costs by laying off employees doesn't really help much. That is because it's non-sustainable. That is because most big corporations actually rehire after making their good employees redundant. This is when the situation improves and when the economy recovers and gets better. Therefore, in my opinion, that's not a good strategy to adopt, but most of the corporations do it anyways. And the reason why I say that and I'm against it, that is because every time they hire new employees, it's even more costlier. But most managements, unfortunately, do not realize that. And this is all bad planning. That is because of short-term thinking. And it's also because of the bad corporate culture where the executives have to produce results on a quarterly basis to show good performance, which is why they fire and then again hire people. Why they fire by the end of each year in most cases and then rehire in the beginning of next year. It's a travesty, but they still do it. So when we look at the last 10 years performance for Meta, its revenues have grown by more than 1,700%. So its revenues have actually grown from some 11 billion to 127 billion today. So its cumulative net profit has also grown by more than 2,800% over the last 10 years. So therefore that 23 billion of net profit has grown by about 8%, which is the annual compounded growth rate over the last 10 years. So Meta, as I mentioned, since it's been able to control its costs and expenses, has had a capital expenditure of just about $28 billion, which is less by 9% compared to last year. Now, the most important thing for any investor or an analyst is its free cash flow. Its free cash flows have been growing by more than 100% every 3 years. Which is why I think whoever invests in this company is going to double his investment in every 5 years, if not in 3 years. Now, this by far is one of the best growth rates that we have seen for any company only after Alphabet or Google. Now, Google is sitting at more than 70 billion of free cash flow today, which has grown by more than 30% CAGR over the last 3 to 5 years. Nevertheless, the free cash flow growth for Meta is not bad either, which has grown by more than 56% year on year. And when we look at its growth, its performance for the last 5 years, and by more than 200% over the last 5 to 7 years. Which is why I think there's a lot of upside potential for Meta, which is next to Google. Although they steal the user data and are in breach of privacy laws in the same manner. They're not competitors though, mind you. That is because they have different products. But having said that, that doesn't mean no large corporation is ever in breach of any regulations. Which is why we have seen why the top executives of these companies have been summoned by the Congress in the US. Now, the free cash flow margin for Meta is more than 16% today, which has grown by more than 34% over the last 10 years. Its ROE, which is return on equity, has grown by more than 19% over the last 10 years. And its return on assets have also grown by more than 16% for the same period. and its return on invested capital and return on capital equity is more than 20% today, which is very high as compared to most other businesses within the technological space. Now, to find out the fair value for Meta, when we take these free cash flows and discount them back, let's say using a weighted average cost of capital or a risk-free rate of, let's say, 6 to 8%, we get a fair value of more than $400 per share. Now, I know for a fact most conventional analysts would value this business at $170 to $180 per share. Now, there is a reason why our valuation is much higher than that. That is because of the potential that we see in Meta. So one of the main reasons why I think Meta has more value is why I think, in my opinion, Meta is worth more. That is because of its share repurchases. So Meta has repurchased more than 3.7 billion shares in the third quarter of 2023, which is not going to stop here. It has an authorization from its board to reinvest and buy back another $37.22 billion worth of shares, which is what will increase the value of its share in the next couple of years, with a possibility of a double. Now, as I said, those were the quantitative aspects of Meta. Now, let's move on to the qualitative aspects of the company. Now, remember one thing, that when Facebook started buying back its shares in 2018-2019, its price had actually dropped close to $100. But yes, so the investors had actually started dumping the stock. That is because they thought Mark Zuckerberg was not justified in buying back its share at an average price of $350, which is when the price actually dropped to some $100 within a span of 1 to 2 years. So they kind of punished the company, which obviously provided a great opportunity to a lot of value investors to get in at those levels. Yet no one actually invested in this company. Now, I still remember some big investors like Li Lu, in fact, dumping shares of Meta, which is when Facebook was going through a lot of scrutiny. And there were also investigations with the regulators also slapping the company with Meta. And there were a lot of regulators, not just from the US, but also from Europe. That is because the company breaking privacy laws, which obviously what I think were justified to some extent. Now, here's the important part which differentiates us from a lot of others. Now, how does Meta or Google make money? Now, Meta or Google make their money from selling ads. Now, don't be mistaken, Meta does not sell its own ads through its social media platforms such as Facebook or other applications such as WhatsApp. As I said, Facebook has a lot of data centers. So what it does in these data centers is actually it mines the data. So where does it get its data from? It gets it from Facebook, which is somewhat similar to what Google does. So every time you go on Google search, looking for a location, searching for shopping centers, or any other information, your data gets stored. Similarly, when you're on Facebook, you interact with people, you look for information, you visit other websites through that, looking for products or any other information. So your location gets stored, and all the other activities that you're interested in, the activities that are happening around that location that you're looking for, or any activity that you are engaged in, and the conversation that you have with your family using Facebook, or the communities you're interacting with, which reflects your interests, the topics you're interested in, your buying patterns, the products that you like. So your entire activity or anything else that you are engaged in with your family, friends, or community are all captured by the system. Now, this obviously shows the patterns, which is why it's called the behavioral data. Now, this data is used as a raw material by Meta or Google, which is then mined and refined in the data centers. Now, Meta, similar to Google, deploys a specialized computational system, which is called machine learning or the artificial intelligence, which produce algorithms. Obviously, this machine intelligence or the artificial intelligence actually helps in understanding your behavioral patterns. It helps in predicting your actions, which is also called predictive analytics, or in other words, the artificial intelligence as we know it. So therefore, that whole operation actually converts that raw material, which is all the information about you, which could be your location, your name, the details of your family members, the communities you're part of or you interact with, or the places you go, for example, to do your groceries, the stuff that you buy online or through stores, or any other medical related interactions with your hospital, with your pharmacy, for example, for your medicine. All this information about you is then actually used to create algorithmic products. Now, no one has access to these data data centers. That is because it steals the data, because it's secured like a moat, and all this is done by the machines, and no regulator understands this. That is because the techniques or the operation itself is very unique and something new, which only Facebook knows, and because this is a breach of privacy, and because Meta or Facebook does not have your consent to use your information, which is why it's done in a very secure and covert manner away from its users. So what they do is they create a profile and package this information and then sell it to advertisers in an auction, which is what makes Meta or Google unique in their own way, which is why I call them a monopoly. That is because it's so hard to replicate this model that they have built, which is what gives them an edge over any other company. That's why I say they have no competition. Now you may argue that there is no morality or ethics here, but unfortunately this is how some of the largest corporations do their business. The kind of stuff they do might be unethical but legal. So therefore it's also the fault of the user that provides the product. So the more you're hooked to Facebook, Instagram or WhatsApp, you provide that information to Meta. Now this is similar to Google, but Google goes one step further. It does not just capture what you provide, it also goes and steals any information that's there on the web. For example, you have your health records. Now obviously with most of the businesses going online, with everything being digitized, for example the digitization by the banks, you have all your records that are available online. So Google goes and steals this data or the information or any document that's available on the web and creates a profile, which is then mined and refined, as I said, for a high success rate, a high hit rate by the advertisers, and auctioned away to these advertisers. So the advertisers, which are other businesses, they pay millions and billions of dollars in an auction to buy that information about you. So as Meta and Google improve their artificial intelligence and machine learning, it improves the predictive behavior, which means the information which is being captured by Facebook on its social media platform or on Google, it will translate into more accuracy of information, which is when the advertisers, when they buy that information, or the algorithmic products, because there are a lot of algorithms which are deployed by Meta or Google, which is how it is used for targeted advertising by these advertisers or the businesses who paid billions of dollars to sell you their products. Therefore, the data center at Meta has the capability to capture, store, and analyze and learn from the byproducts, which is how they monetize their social media platforms, be it Facebook, Instagram, or WhatsApp. It also helps them improving their services. That is because all this information, all this behavioral data gets recycled again and again, which helps them improving their user experience on their platforms. So the value of this data or algorithmic product also goes up, as in when you are targeted by the advertisers, you buy more and more of their products. Or even when you click, if there is anything that's pushed onto you, which takes you to their website or their product, that also has value. That is because it increases the value of this data, which is sold by Meta. Now, historically, as we know, that this is what the advertisers always wanted. And some big corporations spend billions of dollars just to get an information about you. So when they get this information, which is nothing but your behavioral pattern, it gives them an opportunity to sell their products to you. And not just sell, but sell more to you. Which means if you're on medicine, you need the same medicine again and again, which means the same pharmaceutical company will sell you more and more of their products. So what previously was considered as a guessing game for advertisers, now it has become more of a reality. So Meta or these advertisers, they kind of influence your behavior because they know so much about you. So therefore, the more you sit on Facebook, it provides your social behavior or pattern to Facebook. Therefore, you're not using the product, but you're the product yourself, which is very unfortunate, but that's the way it is. So therefore, Meta in a way kind of controls your mind and your behavior. Now imagine that is for almost half the population, because they have more than 3 billion users. So therefore they have an edge, which is why they'll do well over the next few years, because it decides on your behalf. And this is the reason why I say that Meta would do well, because it influences your decision and then decides on your behalf. That is because you share your privacy and then you have given your decision rights to Facebook or Google for that matter. Now, as we know, the brain behind all this was Sheryl Sandberg, who was previously with Google, but then in 2008, she was hired by Facebook. She was hired by Mark Zuckerberg himself to work on the social graph provided by Facebook. She improved Facebook by engaging more with the users, which obviously helped the platform to build more algorithms, which is why Facebook has become so successful. She very recently resigned from Facebook though, as we know. But that doesn't mean Facebook, the market intelligence or the AI or the marketplace is going anywhere. Now, as we know, it's not just the Facebook. If you look at WhatsApp or Instagram are so engaging and addictive. So both of these apps also have around 1.5 billion users, which obviously is more value to Meta. Now, as we know, the digital ad spend or the revenue, there are only two players that actually dominate this space, which is Google and Meta. Now, for more than 200 billion of digital ad spent in the US, more than 60% of that actually goes to Google and Meta. Now, Meta or all its applications obviously have an advantage of a network effect, which means everybody is connected, which is what brings in stickiness in its products. Now, WhatsApp has obviously disrupted the banks. That is because of its app-based payment system. Similarly, a Facebook Watch has also disrupted YouTube and the TV channels. Now, Facebook has almost every product for its users. For example, Workplace, which is similar to LinkedIn. So therefore, there's a lot of stickiness. So this could be used by specific businesses or industries, which is very useful. Therefore, it makes it easier for Facebook to actually target those businesses or industries. Similarly, even for communities, most of the social life actually happens on Facebook today. Be it political campaigns or even religious groups, they all conduct themselves on social media today. Therefore, there's huge potential for Meta to actually capitalize on all these opportunities. So the only risk that Meta faces today is the risk from regulators. That is, whenever it's in breach of privacy laws or regulations. That is why it has paid a huge price over the last few years. It's all because of the reasons that I mentioned before. Now, we know that during the elections of 2016 in the US, when Donald Trump won the elections, Facebook was used for his campaigns. So the Republicans actually heavily invested on Facebook, actually used Facebook as a medium to influence voters. Now, Facebook, as we discussed, uses a lot of algorithms, which is why it has been able to influence a lot of users. Now, obviously, there's a lot of evidence of this, and even Mark Zuckerberg, who was summoned by the Congress, and Facebook was fined heavily for facilitating and failing on every front. Now, this is the power of Facebook, or what I was referring to previously, that it can influence and can predict and even change its users' behavior, which is what we saw during those elections. Now, because Facebook uses algorithms, it has the power to amplify and can influence its users to make anyone more popular. For example, a political leader, which is why it has advantages of connecting people and at the same time disadvantages of dictating and influencing people's minds. So it's technology which is a blessing and a curse at the same time. Now, because AI is a new phenomenon, it's beyond the understanding of a lot of lawmakers and politicians. And it comes to its governance, which is why Mark Zuckerberg or Meta is so powerful, because it kind of governs itself. And there's no regulators' oversight, which is an advantage as well as a disadvantage. An advantage because it can exploit and extract more user information, more data mining, and selling more ads, which could be very profitable for Meta. But a disadvantage at the same time, that is because it exploits and steals users' data and will be in breach of privacy or anti-competition laws, not just in the US, but also in Europe, which is why it's been slapped with fines recently. Now we know that its other platforms like Instagram have been very harmful for a lot of teenagers, as we know. And most of its users are teenagers. Some of the teenagers actually committed suicide because of body shaming. And there have been quite a few instances like that. It generates more than $100 billion of revenue through this platform. It has more than 22 million users. So therefore, it has a lot of potential, but also needs to be governed at the same time. Now, even for this platform, it uses AI to attract users and also connect people. Therefore, teenagers who seek attention, it's easier for them to attract, to connect with a lot of others, perhaps from the opposite gender, from the same age group. Therefore, it could be useful and also harmful at the same time. But nevertheless, despite all these risks, Meta still has enormous potential for growth in the next 2 to 3 years. That is because its platforms are addictive, which have more than 50% of the world population. It doesn't have to pay a dime to produce that raw material for its production. Now, all the information that it captures about its users, which is nothing but the raw material of the data, it refines it and then auctions it away to advertisers for billions of dollars. It has been able to monetize almost all of its platforms and applications, which will help the company grow, which will take the company to the next level. It has also changed its name from Facebook to Meta. That is because the whole focus is on Metaverse now. It was also to do away with all the bad reputation it earned during 2016 elections, which is why I think it will gain more and more traction, and the growth potential is almost infinite. Now imagine a world, for example, Metaverse, which will have the whole population of the world using Meta's products, and Meta being able to leverage on that opportunity, which is why I think it's going to grow rapidly over the next few years. Although the company was not an efficient allocator of capital, paying an average price of $350 per share when it was buying back its shares in 2019-2020, but it's learned from those mistakes and becoming more and more efficient in allocating capital. It also issues stock options and RSUs, which is restricted stock units, but then that is linked to the performance of the employees, which is how it compensates to its employees, which obviously is a good thing. Now, cutting down on its capital expenditure, the company used to spend 10 billion on research and developing its products, especially within the metaverse space and for its data centers. It developed virtual reality products like Oculus and has also built AI capabilities like no other business within this space. I think Meta is far ahead as compared to any other company. It keeps gushing cash, which is why it has more than $60 billion in cash and cash equivalents. Now, since it doesn't pay any dividend, all this is going to be paid back to shareholders through share buybacks over the next 2 to 3 years, which is why I think it should double in the next 5 to 7 years. So therefore, my thesis has not changed about this company. So that's it from me for today. Hopefully you have gained some valuable insights. In fact, more than what you can find anywhere else. We make a very compelling case for Meta, which is why we differentiate ourselves from a lot of other investment research companies. So hopefully I'll see you soon again with a different topic on our channel. So don't forget to tune in again to our YouTube channel. But until then, be safe and invest wisely. So bye for now.